Hello and welcome to America's Forum here on Newsmax TV. I'm John Bachman. The Fed has said that they may start raising short-term interest rates, which caused some panic on Wall Street and sent some stocks into free fall yesterday. The Dow Jones Industrial Average lost 90 points yesterday, and the Nasdaq fell nearly 35 points. In a knee-jerk response to the Fed's report, the Fed has kept interest rates at close to zero since the end of 2008, and any rise is unlikely in the short term, as most Fed officials believe it would not be an appropriate measure to raise those short-term interest rates until 2015 or later. They also argue that standard policy tools do not apply as the U.S. economy continues to feel the impact after a poor recovery following a recession. The Fed had previously suggested any rise in interest rates would be linked to the unemployment rate falling below 6.5%. But last month, unemployment dipped to 6.6%. But problems, of course, still remain in the job market. Joining me right now via Skype to discuss all this and more financial concerns is Ultimate Wealth Report editor Sean Hyman. Sean, thanks for being with us.
Good to be with you.
All right. First of all, Sean, the Fed's decision to continue some of this tapering, this hardly comes as a surprise to you, does it?
No, it doesn't. I mean, I think that they'll possibly continue the tapering, but the problem is that the dollar is not responding like a lot of people thought. A lot of people thought, well, the dollar is going to be pushed up because of tapering, but honestly, the dollar was still falling on the mention of tapering. It was falling when tapering was instituted, and the dollar is still falling. So we've still got a crisis in the dollar that I believe will continue.
Now, the Fed seems unconcerned about the actions it's taking and the effect that they're having on emerging markets. Why is this bad news, or why could it be bad news for investors?
Well, really, I think a lot of the worst is over for emerging markets. I think a lot of the capitulation has already happened in emerging market currencies and also in emerging market stocks. And if you look at the emerging market stock markets, they're some of the few values that can be found in the world today, really. So stocks right now are very elevated according to their PE ratios historically here in the U.S., but actually that's where you'd find some value. So I believe that some places like Turkey and Indonesia, China, Russia, some different places will find actually a lot of inflows starting to happen in those areas as money continues to flow out of the dollar and eventually out of U.S. stocks.
Now focusing on the unemployment rate, which is something the Fed has traditionally paid close attention to, we're sitting now officially at 6.6%. The target was 6.5%. What do you see happening if this trend continues and we see the unemployment rate continue to fall below 6.5%?
I think the unemployment rate continues to gradually fall, but we still got a lot of unemployed out there, a lot of people not seeking employment. So I think that those numbers are a little bit shrouded from what's really happening out there in the economy. Nonetheless, I do feel that the U.S. economy is slowly picking up and improving, but I don't feel that that's going to translate into higher stock prices because that's already been priced into stocks well ahead of time, this economic improvement, and investors were comfortable doing that because of the stimulus that the Federal Reserve was providing to the stock market. So I think stocks could diverge from what the economy actually ends up doing.
But because that number was so black and white, I guess, if you will, 6.5%, if that number, official number, the non-farm payrolls does fall to 6.5%, should we be expecting some sort of additional reaction from the Fed?
Well, it's hard to say because we just got a new Fed chair and what she'll do for sure. But I think that, there's a good chance that she will continue on the path of making sure she leans towards accommodation, leans towards easing if and when it feels that she needs to. So if she starts to see stocks sell off, I think she could easily reverse course and ease up on tapering or halt tapering temporarily to make the markets a bit more comfortable.
Now, if there isn't a significant move at 6.5%, do you think that constitutes an admission maybe by the Fed and kind of goes along with what some other folks may be saying right now, that 6.6% of the non-farm payroll number is shrouded, as you said, and doesn't really mean a whole lot now in the grand scheme of things with the economy?
I think they're still concerned about how soft things really are. So I think that they, behind closed doors, have deep concerns, but to kind of save face to the public, they have to come out with a strong message and a confident message, because the last thing they need to do is to portray that there's possibly more weakness than there actually is. It would spook the markets. And so I think behind the scenes they have a lot more concerns than what they come public with. And so I think they're going to be very nimble and very willing to adjust to whatever the times bring us in the future, no matter what the unemployment rate is at. But I think the unemployment rate will continue to creep down.
Sean, as we look at some of the other economic indicators right now, what would you say about uncertainty in the U.S. economy? On a scale of 1 to 10, where would you say uncertainty ranks right now?
Well, actually, the U.S. economy and global economy is actually picking up. But the problem is, if we see too much of a sell-off in stocks, that's where the problem could hurt investor sentiment, could curtail consumer spending, and could possibly reverse that at some point. So I don't think we have a lot of risk just yet right now. But in the coming months, if depending on how severe the stock market correction is really what a whole lot of that rides on. If it's a 3, 4, 5% correction, or even a quick 10% correction, which occasionally happens, we're probably okay. But if we end up having another one of these, 40, 50% corrections, which has happened in the last matter altogether.
And despite the fact that things may be improving a little bit, at least in the short term here, the price of gold doesn't really seem to be reflecting that, the price of gold going up here initially. But in a longer term look at gold, there's more a bearish attitude towards it. What can you do? What can you tell us about the gold market right now? Because it seems to be sending some mixed signals.
Yeah, well, honestly, I'm glad there's a bearish attitude towards gold, because that's when it gets to be more inclined to being more bullish. So when everybody's on my side of the trade is when I start to get worried. But honestly, as long as gold has continued to hold the 1175 to 1200 level, I believe we found a bottom there, and I believe we're on the next leg of the next upturn. My next targets for gold are in the 1400s, and then after that, the next benchmark is in the 1600s. So I'm very bullish on gold. I think as long as you continue to print money, the dollar continues to decline, you keep racking up debt as a nation, I think that's a good day for gold overall.
Now, outside of the United States, what do you think is putting additional pressure, rising the price of gold in the future?
Well, there's a lot of fiscal demand that has actually been happening last year and this year. The problem with the fiscal demand last year was that it was shrouded by the huge ETF selling that was happening in the paper market, the gold ETFs like GLD. But what's happening now is most of that is already dissipated, and so now it's really being driven by the fiscal market. And China's been buying a lot of gold, India's been buying a lot of silver. You look at the reports from the Perth Mint or the U.S. Mint, they've been selling out of gold coins. So there's huge fiscal demand both last year and this year. It's just this year you're starting to see that happen now that a lot of the ETF selling is out of the way.
Yeah, one last question for you, Sean, before we let you go. You mentioned China, and they're buying a lot of gold right now. Are they trying to internationalize the yuan with this purchase of gold?
Well, I think they're trying to, drive a lot of confidence to their currency, because in time it's going to be free-floating currency. And hopefully, I think that they want to be at least one of the world's reserve currencies, whether they end up in a basket or whether they end up actually the world reserve currency one day. It's a little too early for that to happen right now. That's not going to happen tomorrow or next year, but they are setting the stage for that.
Certainly something to watch on. Hyman, thanks so much for being with us. We'll have you back soon. Always great to get your take. We'll be right back with more here on Newsmax TV on America. Tweet me directly, JohnB_Newsmax, or all of us here at the program, Newsmax TV, #AmericasForum. We'll be right back with more.